I think the odds are pretty good this happens before the end of this year. The extraordinary tightening, I think, we'll see. I think something else breaks. So the Fed pivots, I think, sooner than the market expects, but not because of the reasons the market expects, but because they break something.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for September 18th through September 25th, 2023, while supplies last. This week we feature two different specials: 10-bar bundles of Nordic Mint 5-ounce bars at $1.99 over spot per ounce, and quarter-ounce gold eagles at $59.99 over melt. First, when you purchase 10 or more 5-ounce Nordic Mint bars, you pay only $1.99 over spot per ounce. 3/9 fine silver, these are priced lower than almost anything else other than 1,000-ounce bars, but with the far better liquidity of the 5-ounce size. The Gold Eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The quarter-ounce Eagle is additionally sought after for its high degree of flexibility and liquidity. Like the 1-ounce Eagle, the quarter Eagle is 22-karat gold strengthened with copper. Its 1/4 of a troy ounce of gold comes 40 to a tube, 2,000 to a box, and it's available at just $59.99 over melt while supplies last. Both our specials this week are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Lobo Tiggre from the Independent Speculator. Lobo, thank you so much for joining us today.
Well, I'm happy to be able to do so after a long absence, Elijah. Completely my fault, but here we are.
Well, I hope your travels treated you well there. So it's great to go across the pond every once in a while. I did want to discuss the BRICS expansion. I know this happened last month, and this is something that you had predicted. Is a lot of people were talking about how there was going to be a gold currency announced. That didn't happen. I know Brazil's president talked about a common currency, but it wasn't a main focus of the event. One of the big things that happened is that they invited 6 more nations to join BRICS, including Saudi Arabia and Iran. So what do you think the significance of this is?
I do think it's important, but I have to say, I thought we were friends, and you've just accused me of making a prediction. You know, I'm the guy who rails against the prediction racket. It's great for selling newsletters, but often not so great for investment outcomes. So I'm a little miffed at you, Elijah, but okay. I did say that it was unlikely that a BRICS, gold-backed or any currency was going to happen. And so, yeah, that was right. The odds played out in my favor on this one, but don't go giving me a crystal ball or anything. I don't claim to know the future. But yeah, I mean, we don't need to beat this to death. I think that there are people, including my good friend in Puerto Rican, Brent Johnson, who downplay the de-dollarization trend. And I understand why it takes a lot to dethrone a king so powerfully entrenched. But that doesn't mean it's not happening. And every year you see that the balance of reserves held in dollars falls. So in my view, the de-dollarization trend, it's not a question. It's not even really an if or when question. It's a happening question, but it's one that lends itself to a lot of hyperbole and people writing exciting copy to sell newsletters about, you're going to buy gold now because this, that, or the other, right? This is, if it's a train wreck, it's one of those slow motion train wrecks. This will take years at best. And as you can see, they didn't even announce a currency. But, they talk more about settling, trade between themselves without using the dollar. And so it's a process in motion. And at some point, there'll be a tipping point where that really starts causing problems in the United States. But I don't know when that will be. I don't think anybody knows when that will be. And I think, instead of getting angry at the dollar milkshake guy and others for being skeptical about this, I think it makes sense to listen to them and consider where and how they might be right, especially after how many, embarrassing issuances there were of proclamations of the gold BRICS currency that was going to come out on August 25th or whatever the date was, right? Let's have a little humble pie here and think about this. Long story short, this matters, but it makes no difference to my investment decisions today. In time, it will be much more important.
In your opinion, why does it make no difference today? Because as you mentioned, it's a slow progress, but you're saying really day to day, it doesn't make any difference investing wise?
Correct. And particularly as a commodity speculator, this isn't going to change the price of copper anytime, or even gold as a monetary metal, as the premier monetary metal. And maybe even if I put my Darth Silver hat on, possibly the only monetary metal left standing. You could see all those headlines that drove my fellow gold bugs nuts about the coming BRICS conference. There was zero impact on the gold dollar exchange ratio, which I like to call it instead of the price of gold, because gold is money. Right? So just like you have a euro dollar exchange ratio, I see a gold dollar exchange ratio. No impact whatsoever. Even when Russia said that the BRICS currency was on the agenda and there was going to be gold-backed BRICS currency, of course, Russia's throwing intellectual firebombs into the conversation. They have an incentive to do that. But even that headline had no impact on the gold dollar exchange ratio at all. So, whatever we might say ideologically, what we'd like to believe or hope to believe, or as gold bugs want to believe, just look at the data. The data is this story has zero impact on the metals that underlie most of my speculations.
Now, when it comes to speculations in the short term, I know we're seeing gold rise, so we're seeing silver rise a bit. We're seeing other commodities, oil especially, rising significantly recently. What in particular are you looking at right now?
Well, it is interesting. Even mainstream financial media are starting to talk about hot commodities again, which I find amusing. I see, taking a step back here, I see us as in a large-scale commodity super cycle that will take a decade or more to play out, as these super cycles often do. And so we had a downturn in that. That's not uncommon. Nothing goes up in a straight line. Things seem to be heating up again. But I actually am not a bit. I am quite cautious about putting too much weight on that right now. It seems to be oil-driven. I think it's knee-jerk from the mainstream. They say, oil's going up, commodities are going up. Okay, commodities are hot again. But that isn't a fundamentally driven blip right now. That's the Saudis and the Russians saying they're going to extend their production cuts. And that has nothing to do with the price of copper or any other industrial or energy mineral. So I think it's not well considered, this more mainstream suddenly getting excited about commodities again. It could easily reverse, and particularly for your energy and industrial minerals writ large, because I'm still in the hard landing camp. I don't know I'm sure we'll get to that at some point, Elijah, but I'm still in the hard landing camp. And that has always been bad for industrial metals and the energy complex. So it's really difficult for me to get out in front of that and say, game on, let's go, pile in. Even though oil's done great, people are talking about $100 oil again. I just don't see that standing up to the actual, undeniable recession gripping the world, as that unfolds. So I don't know if you want to get into the recession call or not, but I have to quickly say that the one exception to the remark I've said, well, maybe two. One is gold is different. It's not an industrial metal. It's a monetary metal. It has its own drivers. And uranium is different, partly because unlike many of the other ones which have corrected but are still at very good prices for the producers, uranium is still below the incentive cost for most miners to mine the stuff. And it's been on a tear despite scary headlines. So it is interesting. It's marching to the beat of its own drummer. And I have to say, Elijah, even though I just proclaim myself the non-guru and I don't like making predictions, I have been saying that the odds favor this being the year for uranium. And we've just hit a new, more than 10-year high. Really haven't seen prices like this since Fukushima. So it's happening. And I'm glad to see it.
And what are some of the drivers that you're seeing, and do you anticipate this run to continue in uranium?
Well, it's one of those things where the story hasn't actually changed that much. and it's been frustrating because uranium bugs have been saying the fundamentals are strong for years and years and years, and it didn't seem to matter. Their price didn't move. And by the way, I have to say that I'm not a permabull here. I have been completely out of uranium until 2018, late 2018. I started to see it, really carving out a bottom and went long. And until recently, I've actually been sort of a short-term bull because uranium's not rare. There's plenty of it out there. Recent research that we've done, we have a free uranium report, if you don't mind me mentioning that. It's a free download on our website. And this actually changed my mind a little bit on this. I had thought that the low-hanging fruit, the mines that are on mothballs or the cheap projects that could be quickly brought online, I had thought that would meet the near-term demand pretty quickly. High prices would cure high prices, as our friend Rick Rule likes to say. But the math we've done lately says that it's not going to be enough. Yes, that will happen. And we're starting to see that happening already. But it won't be enough to meet the demand, which is really growing extraordinarily. And speaking of the BRICS devils, right? They're going gangbusters. And even Europe is turning around. Even Germany is having a new conversation that was unthinkable on nuclear energy a year ago or two. So the drivers are in many ways much the same as they have been, but with the added energy, if you'll allow me, of Europe having really come up, had its face rubbed in the brown stuff of coal and being embarrassed about that. And Germany's still dragging its feet, but the rest of Europe has done an about face and is going visibly as fast in the nuclear direction as they can. So it's a very strong story. It's even stronger than ever on the fundamentals. Now the technicals, we have another breakout. You have a 5-year volatile trend, but a sustained upward trend with a series of higher lows, as my technical friends like to tell me, is so important. So it's all looking very good. And then on top of that, you just have the narrative where even the likes of Greta Thunberg, nuclear expert that she is, had been telling Germany that it shouldn't shut down its reactors. So things like that tell me that this is an idea whose time has come. It's not just because I see the price moving, though I'm very happy to see the price confirming what I've been saying. I'm pretty sure you and I have spoken about this before briefly. And I was right. And my readers have been able to profit already.
And when it comes to the Fed decision, I know that's coming out today. We're recording this on Wednesday here. They're expected not to raise interest rates. And you mentioned earlier in this interview that you still are expecting a hard landing. So can you expand on what you see the Fed doing and why it seems like we're still headed towards not pleasant times for the economy ahead?
Sure. So it's a tricky time. We're recording right before the Fed press release comes out. Anything I say could be invalidated in a few minutes. But I do expect that we'll see another hawkish pause, right? They'll pause. Right now, the market rates, the last time I looked, were in excess of 99%. So, the bond market is saying pause. If they don't, that will really rock the boat in a big way, and they know that. So I think for all the other reasons to pause are there, they appear to be winning. Team soft landing, hoorah! Inflation with a 3 handle, that's almost down to 2, right? So I think they probably will. Never say never, but when our viewers are watching this, they probably already will have. But I think Powell will do his best to whip out his jawbone and beat the markets into submission afterwards so they don't get too excited. The last thing they want is the markets to undo their hard work, putting people out of work by easing financial conditions. So I think, hawkish pause. Your readers will know whether or not my cracked crystal ball is right or not on that one. But it almost doesn't matter. I mean, we've gone from 0 to 5.5 interest rates in record time after years and years, decade plus of zero, effectively no interest, free money. And, I may be wrong. This really is unprecedented. So I can't say every case of this in history shows that something major is yet to break. But everything that I have learned from history and economics tells me that you can't make such an abrupt change from extremely accommodative policy to extraordinarily rapid tightening without more things breaking. And the difficulties that the regional banks had last March, I think that was just an overture. So there's two things to keep in mind here. The mainstream is looking for the Fed to pivot just because they beat inflation, or it's beaten enough, it's close enough to 2% that the Fed can say, okay, well, we don't need rates to be this high. It can start, and the market odds are very strong that the Fed will pivot by mid next year. They're going to start loosening. By late last year, the odds are extremely high that the Fed will be loosening. But these people giving you these odds, the bond vigilantes and so on, they're not seeing what I'm seeing. They're not saying, oh, there's going to be, something's going to break, things are going to get bad. They're seeing the soft landing, or at least a not terribly difficult landing, right? Things will slow down a bit, but under control. There'll be a bit more unemployment, but nothing terrible. And inflation will be down. So hoorah, we don't need to have these high interest rates anymore. I think that's wrong. We'll find out. I don't know the future. We'll find out. But I think that the Fed is going to break something. Now, if I'm wrong and nothing else major blows up, then probably the mainstream is right. That's probably where we go. The base effects are not helping the Fed anymore, but they're still there. We'll see. Energy is gone up. We talked about oil a little bit, but housing is coming down, and that's really a major variable. It's a large component of the CPI, even if it's this idiotic owner's equivalent rent that your audience probably understands is nonsense and very lagging. That has really still to see the effects of 7% mortgages, 7.31 when I looked this morning. That is a big deal. And that is, if not deflationary, disinflationary. I hate that word. But it is going to make it harder for inflation to print higher, absent renewed fiscal largesse or renewed easy money policy from the Fed. So again, if the mainstream is right, probably inflation cools enough that the Fed can declare close enough to victory, and they start loosening they start easing up a bit on the brakes mid next year. Or I'm right, something else breaks, and I think the odds are actually good. This is a short-term almost prediction for you, Elijah. I think the odds are pretty good this happens before the end of this year. The extraordinary tightening, I think, we'll see. We'll see. I think something else breaks. So the Fed pivots, I think, sooner than the market expects, but not because of the reasons the market expects, but because they break something. One way or the other, I think, it gets into a long debate about how much higher for longer. But for now, the takeaway, whatever the Fed does or doesn't do, the takeaway for, gold and silver investors is this makes a big difference in terms of where the gold dollar exchange ratio goes. Because if the mainstream is right and it looks like team soft landing is right and it's higher for longer until sometime next year when the Fed eases up just because they won, there's nothing bullish for gold in that. Gold doesn't pay interest, right? If the Fed's won, then there's no fear, there's no need for a safe haven. If I'm right, then oh my gosh, there's something bad is happening. There's need for a safe haven, and the Fed pivots. Easy money is bad for the dollar. It's good for alternatives, including gold and probably silver.
If you're correct, then obviously this should benefit gold and silver. How else are you positioning yourself right now for, kind of, it sounds like something maybe unknown or something could break, as you're saying, before the end of the year. You've mentioned this could be commercial real estate, but how are you preparing right now?
It could, higher for longer all by itself. That changes. This is something to give credit to my other fellow Puerto Rican, Peter Schiff, that he likes to point out. Interest expense, that's a cost. So this is a cost factor that businesses are having to deal with. There's a lot that could break in the night. So we'll see. So how we deal for that very specifically, and I have to put on the Darth Silver hat again. Silver has been acting much more like an industrial metal this year, and you can see it on the intraday charts and the daily charts. Like overall, it's following gold, but the gold-silver ratio, as we all lamentably know, is not going where we want it to go. And that's because if you watch it, on a shorter term basis, the silver chart looks much more like the copper chart than the gold chart. And you and I and our audience may understand that silver, is money, has been for thousands of years. It is the word for money in so many languages. Yes, we get all that. But those guys on the COMEX who trade futures, whose prices and decisions we mistakenly refer to as the price of silver, they don't care about any of that. It's just another metal, and it goes in solar panels, and it's an industrial metal. It's no different from pork bellies or copper. And you'll see it on the charts wiggling just like copper. And that says that we need to be cautious about assuming that silver will track gold very closely. Now, I don't think gold takes off and silver does nothing. That's not a credible scenario to me yet. There's enough of us and others out there who get that silver is money, that it can't just be left completely behind. But we are a minority. We need to understand we're not the mainstream. I'm sorry, my fellow silver bucks. We're not the mainstream, and you know it. So those other guys setting the prices, or gals, right? We saw this in 2020 when gold and silver both fell off the cliff, and then gold picks itself right back up again, and silver just went sideways for a year almost. We could see something like that again. I don't want that to happen. I'm not I'm not anti-silver. Please don't hate me for just saying that. But it's my job to tell you, what the odds look like. And I would not be doing you a service to just say, rah, 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 buy, 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 if silver might underperform gold in the months immediately ahead. I think the odds are significant that it may. So the answer to your question right now, Elijah, how am I dealing with this uncertainty? Is I'm not buying any industrial metals at all. No copper, no lithium. Ahead of what I see as recession denial giving away. We haven't seen capitulation yet amongst the recession deniers. That's the key point I'm expecting probably by the end of this year. And I think that whacks all your industrial metals, no copper, no lithium. Silver, I don't know. It could join that crowd. It also means no oil. So yes, I have missed out on this rally up to 90 plus oil. If it goes to $100, well, I won't entirely miss out because I didn't sell all my oil and gas positions. But I have not been allocating more in that direction because I see this recession coming. And I still wouldn't do that because, this thing that might break, it could be hitting the news tomorrow. We don't know. And I don't want to be long anything industrial when that happens. So that leaves gold and uranium because it's exceptional. Because not just that I mentioned before that the price is still below the incentive cost, but also just the supply demand balance is there. One thing that has changed from the past years where you could make a similar argument is that Sprott has hoovered up all the cheap pounds in the market. Those are obviously gone. It's at $67 uranium as you and I speak. It's difficult to make the case that there's a bunch of cheap uranium out there that's ready to flood the market. I know there is an argument out there from an esteemed analyst saying there's 1 billion pounds of uranium on the sidelines that could come into the market. That is true, but a lot of that uranium is still in the ground. It would take money to come out of the ground. You need feasibility studies. You need the capital to make it come out of the ground. It's not that there's 1 billion pounds sitting there in storage that somebody bought for $18 at the bottom and they're really ready to just dump on the market now because they have a triple. I really do think that I want to overstate this. I wouldn't say that uranium is recession proof. And if we get an actual market crash, everything gets whacked even gold. We've seen this multiple times before. But in terms of where I'm willing to deploy capital right now, I think uranium, it's difficult for me to chase the stocks right now because many of them are at 52-week highs or multi-year highs. But I think uranium keeps going. And I'm looking for market fluctuations to create opportunities there. And gold. And I think gold, it's been several months since you and I spoke, and I'm not sure that I said this the last time we did, but in the last few months over the summer, I turned near-term bearish on gold because it was obvious that the reverse base effects were helping team soft landing, and the two factors I just mentioned, higher for longer and less fear, less safe haven demand, were going to be bearish for gold until I'm right about the recession. That's still the case now. So, if the Fed starts easing up or talking more dovish than I expect, that would be great for gold. But if not, I think we're still, unfortunately, looking at headwinds in the gold space for the nearest term. And I mean, just the next few weeks even, which, I know long-suffering gold bugs, they don't want another buying opportunity. They're done with buying opportunities. They want payday. I get it. I know. But, we can't tell Mr. Market what to do. And for what it's worth, though, I think if we do get another buying opportunity in weeks ahead, we already have a lot of cheap I think quality gold stocks that are still on sale quite cheap. But if they get cheaper in the weeks ahead, that would not be a bearish signal to me. I wouldn't be frightened. I would absolutely see that as a gift. I remain convinced about the thesis you and I have described. So I'm convinced gold is going to new all-time highs, nominally at least, eventually in real terms. But in the more near investment future, I think at least nominal all-time highs. And therefore, a buying opportunity is a buying opportunity. And I'd love to take advantage of one.
And mentioning silver, and this may also, if you wanted to comment on platinum, kind of apply to that, because it seems like what you're saying, a lot of people point out the ratios and mention, it's an anomaly that platinum is half the price of gold right now. And it's an anomaly that silver, at least, in the last couple decades, has been at a higher, has been undervalued with respect to gold. But it's important not to just look at the ratios, but also to look at the fundamentals. And it seems like that's what you're looking at. Is there are other indicators, but the fundamentals kind of trump those.
Yes, but the fundamentals are not the same for all metals. And it's good that you bring this up. I don't know if the audience is going to love me for my answer here, but I'll go there. The use case for platinum has clearly changed. The fact that platinum is more rare in the Earth's crust is not enough to make the price higher. My favorite example is my fingernail clippings are rare in the Earth. I'm one of 8 billion people. Only 1 in 8 billion people can produce Lobo Tiggre fingernail clippings. And guess what? There's no market for Lobo Tiggre fingernail clippings. No, as rare as they are, 1 in 8 billion. Nobody wants to pay me money for my fingernail clippings. Imagine that, right? So the use matters. Platinum, I'm sorry, it's an industrial metal. It's never been a monetary metal. In spite of Paul Krugman wanting to pay off the national debt with a few platinum coins, it's not a monetary metal. It's never been in circulation as money. And it got expensive. People started making some jewelry and stuff out of it. But, that's a sideshow. It's an industrial metal, and it rises and falls with the fortunes of the auto industry. And the use case has changed. And I understand people are talking that, palladium got expensive and they can reverse it for platinum, but it's not so simple. The platinum and palladium are not entirely interchangeable in terms of how the car is built, where the catalytic converter goes. They have different heat levels that they function best at. And palladium prices have fallen. So this argument that suddenly platinum's going to go. So now the platinum bulls have shifted. Instead of, palladium's too expensive, now the argument is, hydrogen cars need platinum fuel cells. So that's going to make, well, maybe. But, there isn't a hydrogen station in the entire island that I live on. And this is something that's going to, if it's true that hydrogen cars are going to make the electric cars all go away, that's going to take decades to happen. It is not an investable premise right now. So it's not a reason to buy a platinum stock right now. And silver falls somewhere in between. As I said, I got to stress this again, because I know the silver fans are going to hate me, Darth Silver, for saying this. I don't see a scenario where gold takes off and silver does nothing. But could the gold-silver ratio widen enormously? You betcha. Because those traders on the LME and the COMEX, they're seeing silver as an industrial metal. And if gold takes off because of recessionary fears and industrial metals tank, I could absolutely see the gold-silver ratio widening, to new record highs. And that would be very painful for anybody who makes a near-term bet. Now, if you're stacking silver, that's different. That's savings. A completely different conversation. But if you're buying silver stocks or even going further out on a limb with margin or options because you think silver is about to take off in this recession and you're wrong, or even you're right about the recession, but then silver responds like an industrial metal, you're going to take a world of hurt in having gone out on a limb in that way. So this is really my point. I'm not anti-silver. I love silver. I'm wearing silver right now, right? But the data is telling us that the use case for silver is changing. And, all the platinum bulls who said, no, that can't happen to platinum. Well, talk to them and feel their pain for the last more than a decade. You just can't ignore this stuff if your object is to make money.
All right. Well, Lobo Tiggre, really appreciate your insights today. If people are interested in learning more, they can go to independentspeculator.com. Tell us a bit about that.
Well, the quick answer is that I encourage everybody to sign up for my free weekly digest. If you do, I will not spam you with a flood of daily advertisements. You get one email per week. I do my best to give you for free my market insights. And then, of course, my business is I'm a due diligence guy, and I hope you'll hire me to help you evaluate your mining stocks and energy stocks and other commodities plays.
Lobo, thank you so much for your time, and God bless.
Thank you, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.